Hi everyone. Today's topic is 3 C's of cyber insurance: cost, coverage, and convenience. Just before we get started, I'd like to introduce myself. I am co-founder and chief product officer of Cowbell Cyber. We are a leader in cyber insurance. So as we all know, with the never-ending rise of cyber insurance premiums and difficulties in finding the right coverage, the underwriting process is, one would say that it's broken. Today, I'll be covering, how you can actually calculate your risk tolerance, reduce your premiums, and we'll go into a lot more details around cost, coverage, and convenience. So let's get started. So before diving into the details, I'd like to give a little bit more background on Cowbell. So we at Cowbell actually delivers cyber insurance protection to the SME market. We define SME businesses with up to 1 billion in revenue. Our unique approach is to combine technology, data, and AI to deliver a superior experience from the starting point of procuring or buying policy all the way to handling cyber claims. This is why we partner with Qualys. By ingesting security insights and risk assessment, we eliminate the need for businesses to manually enter information that we can automatically collect and don't have to go through that hundreds of questions as part of insurance application process. The cyber insurance market, as we know, is exploding. Threat actor is definitely getting smarter by the day. We all know that as a business, you have to do too many things. You have to make sure your top line is growing, your bottom line is good, your feature functionality that you're releasing. Now, security is one of so many things that you have to be careful about or look into. But for a bad guy, that's all he does on a day in, day out basis. What that means is the bad guy gets smarter with every day goes by. And that's not a very fair fight, one may say, right? And the results shows up in the data. 19% of cyber leaders feel confident that their organization is resilient against cyber attacks. That means the rest of the market don't have much confidence. According to Swiss Re's cyber insurance report, 90% of SMEs in the US are uninsured today. There is a huge gap in insurance and protection. This protection gap, which is huge, last year, basically, if you look at the data, cyber events were over 900 billion, which is 100 times the 2021 cyber insurance market size itself. So there's a lot more losses than the coverage that's out there. Here at Cowbell, we are actually closing the insurability gap, and that's primarily the reason why we exist. SMEs make up the 99% of US businesses and half of the US economy. Small businesses have ranked cyber risk as their top concern for the last 2 years. And yet the penetration of cyber insurance in this segment is barely into double digits. Cyber insurance market is expected to grow to 22 billion by 2025 as per the Munich Re Cyber Insurance Risk and Trends Insights. As a technology company, we see our role as growing the market by enabling the SMEs to get the right coverage for their businesses. There is, of course, when it comes to insurance, precision in underwriting is everything. How do we actually price a risk? And insurance, as you all know, is a very heavily regulated industry. We have to abide by a lot of the state-approved models and evaluate our risk as per those models. We actually start with data. Everything relies on the data. Using large amount of data coming from inside out, applications, outside in, public data, we get thousands of signals for every organization. Once this data is cleansed and normalized, it's processed through a series of AI models that leads to what we call risk ratings. These risk ratings, we call them Cowbell factors. We have today 8 of these Cowbell factors that encapsulates an organization's risk, namely network security Cowbell factor, cloud security Cowbell factor, endpoint security Cowbell factor, dark intelligence, funds transfer, cyber extortion, compliance, and insider threat. All these Cowbell factors, the risk ratings, they benchmark businesses against their industry peers. And our risk pool that has now grown all the way to 35 million SMEs, out of which 31 million businesses are of US and 4 million businesses are out of the UK market. So how do we close this insurability gaps, right? We are basically closing these insurability gaps by leveraging our technology. We talked about the 31 million SMEs database of risk, which is a combination of all the firmographic and the technographic data that we get. We bring together the data, the AI models, the insurance expertise under one roof, performing risk assessment, modeling, and risk improvement. So a lot of the premiums that we generate heavily hinge on the risk that a business has. If you take a step back and think about insurance is all about risk transfer, right? We are transferring the risk from an organization and taking on to ourselves. For that to happen, we must be able to assess and understand what risk is there before we can price the risk. Now, if you can manage your risk better by using better security tools and better best practices, then of course the risk is less, and that means the insurance premium is going to be lowered also. So it goes hand in hand. And one of the interesting things is that our policyholders actually improve risk by, on average, 9% compared to the industry average over their policy period. So once a policyholder becomes a customer, their risk actually improves over time because of continuous assessment, continuous modeling, and continuous feedback that we provide to the business. Let's talk about the coverage. Now, cyber insurance market has grown quite a bit over the last decade. Cyber coverage is not new. It used to be considered a silent cyber. Going back, your data used to be constituted as property. So if you have a property insurance, you were covered for cyber losses. But that used to be called silent cover, and that has been ruled out, or a lot of the insurance companies have rewritten their forms after the non-PATIA, WannaCry, a lot of the other events that happened that led to large losses. And those large losses, basically, the insurance companies realized they have to spell out what is a cyber loss and not have to have it constitute as property. And once that happened, it led to the advent of what we call packaged cyber. And packaged cyber means, you have called out the cyber as its own line item in the insurance policy. And even though this does give a better coverage than just a silent cyber, it's not efficient, or it's not sufficient. Many SMEs often require coverage as part of their BOP or general liability policies, and this package coverage is mostly inefficient. And more importantly, the claims process takes forever, because when you file a cyber claim against your property insurance, chances are they don't have the right type of expertise to adjudicate the claim and take it through the process where you can get paid fast enough. So that led to standalone cyber. That's where companies like Cowbell comes into play. Standalone cyber is, of course, the most effective way of buying cyber insurance. And the next evolution in cyber insurance is adaptive. So, how can we make the cyber insurance evolve with the risk as the risk changes over time? So, we are implementing continuous risk monitoring, risk engineering services with our customers, supporting policyholders in mitigating newly identified exposures and security weaknesses throughout the policy periods. We basically are following the age-old belief of prevention is better than cure. The active monitoring, active understanding of the risk, and then using that to ultimately underwrite a lot more often is basically adaptive cyber insurance is all about. If you think about it, industry still underwrites auto twice a year compared to a cyber insurance. Cyber insurance risk is changing a lot more rapidly, but we are still underwriting it only once a year. The dynamic nature of the cyber risk requires the policies to evolve more frequently, more according to the risk. The adaptive cyber insurance transforms coverage from a static offering to a dynamic one, and adaptable to today's and tomorrow's needs. So this is at the core of adaptive cyber insurance. We want to make sure, if as a policyholder you are investing time and energy and resources in implementing new security controls in place, then you can benefit. You can reap the benefits not a year down the line, but start collecting those points or benefits throughout the life cycle of the policy period. That's basically adaptive. So just to give another summary of adaptive cyber insurance, policies should be able to evolve more frequently than yearly to remain aligned with the policyholder's cyber exposures, avoid coverage gaps, and bring full transparency into the renewal terms throughout the policy period. So that's why building the risk management tools and services with coverage is critical to allow policyholders to continuously address changes in the threat landscape. So on the coverage side, I think we talked about how used to be silent cover became more packaged, and then a standalone, and then we are moving towards adaptive. That's kind of the evolution of cyber insurance through the last 5 to 7 years. Today, the package cyber is still very common out there. However, more and more small businesses are realizing that they need more standalone cyber because the coverage limits are not enough. Generally, they're more around 250,000 in limits when they need $1 million, $2 million, $5 million in limits, much higher limits to cover the losses. The third part I want to talk about is convenience. If you have ever been part of buying cyber insurance as part of your company, you realize how tedious the process is, right? And because you have to go through either a third-party assessment, you have to deploy a lot of tools, you have to engage with the insurance company as part of the certain type of audit, a lot of questions, you have to fill up these 200, 300 questions to provide multiple meetings with the insurer. I mean, it's a nightmare, and the larger the enterprise, the bigger the chore, right? It's not easy. Now, that's where we are trying to make a big difference in the market. We try to rely more on the data that we can collect ourselves without having to add extra work for the policyholders or the prospects looking for to buy cyber insurance. It all starts with collecting data from what we call outside in. So as part of our strategy and as part of our core business, we collect security vulnerability insights into businesses so that by the time they come and looking for insurance, we already have a good understanding of their security posture. Almost the same thing what a bad guy is doing from outside in, right? How a bad guy is going to look at the, I'm walking down the street, let's say I'm a robber, I'm going to see open windows, this looks like an easy target. So that's the same kind of a recon the bad guy does, and similar recon helps us understand that, if a particular business is at a higher risk than the other in getting attacked. So while we understand that about a business, we help the businesses understand those risks, and that's where our partnership with Qualys, for example, their brand new product, the EASM, comes into play, where it helps us get a better understanding of the threat landscape, or what you call the attack surface that the enterprise have almost from an outside in. It doesn't require any installation of agents or code. It doesn't require any setup. It's basically your internet-facing compute that can be seen by the bad guy is what is seen by us, and we use that to get jump start on understanding the security posture. But we at Cowbell are not just looking at the security posture, we are looking at the risk posture, or understanding the risk. There's a difference between the security and the risk, in a sense that when I try to understand a risk for a company, there's a lot more at play than just security checkpoints. For example, as of today, there are different industries at a different step in their digital transformation stage. The more the industries go through the digital transformation, the bad guys realize that somebody is making the change for the first time, they're going to make mistakes, and they are capitalizing on those initiatives. Anybody moving to cloud, anybody implementing things for the first time, bound to make mistakes. And this happened at the industry level. So manufacturing is today probably seeing the most amount of claims, ransomwares and others, because of the systems they have and how they're trying to go through the digital transformation. So when we assess the risk, we are not just assessing the risk or security of a particular company. We try to understand the risk at the industry level, and that helps us really understand where a business stacks up against their peers. And it helps us really make sure that a business understands that they can do better because their peers are already doing better, and we can then help them what their peers have done and how they can improve their risk on an ongoing basis. So this continuous risk assessment, understanding the security posture of a company, not in silo but in relation to their industry, is all at the core of us, how we underwrite. Now, as part of the convenience, of course, it reduces a lot of upfront battle in giving information to an insurance company, so that they can underwrite. But it doesn't just stop there. We have built a very modern, state-of-the-art platform where the speed is the name of the game. We are able to generate quotes in a matter of minutes. An agent can come and bring a submission in, get a quote, get a bindable quote, and issue a policy in a matter of minutes. And all that is possible because of our continuous risk assessment on the businesses, deeper insights with partners like Qualys and the like. The convenience also comes as part of the other side of things, not just around issuing policies, but also handling claims. So claims adjudication is a big part of customer experience and convenience. We are in the business of paying claims, and we want to make sure that if something happens to a business, then we are there to support them. We are there to actually help them out of the bad situation. And that's where we have a direct hotline for a lot of these claim scenarios. Within a matter of minutes, an hour, we put together an entire panel to help the business, to understand what are the next steps, what should you do, who should be informed, who should not be informed. Breach counsel comes into play, and the forensics teams, parachute down, and all that stuff to get the business up and running, back up and running quickly. So that's all part of the convenience and making sure that we can deliver that experience to the market. So overall, to summarize, I think trying to decipher or trying to decrypt, that cyber insurance is a key industry. It's much smaller than cybersecurity industry, but when cybersecurity and cyber insurance comes together, we are able to complete what we call prevent, detect, response, and recover. So prevention and detection is part of cybersecurity. Response and recover is part of the cyber insurance. And by bringing cyber insurance and cybersecurity together, we are able to actually help businesses stay resilient and do what they do best in delivering the functionality of the features they need to deliver to the market. Thank you all for joining me today on this session, and hopefully I was able to help you guys get a little bit more color on cyber insurance and cybersecurity and how the two sectors can come together to actually make life easier for our SME customers. Thank you.